morning, everybody. It's Tuesday, January 23rd, and this is the AgYield War Room. Dan Dempsey, and I'll be moderating today's session. As always, if you've got any questions or comments or would like to chime in on anything we're talking about, please drop us a line in the comment section, and we'll be happy to get to that during the show. Quickly here, overnight markets had March corn up $0.01 3/4, 447.5. March soybeans were up 8.5 at 1232 3/4, and March Chicago wheat was up 3 1/4 at 599 3/4. Jumping right in here this morning, we've got some new weather models coming out here this morning that are calling for a turning of a drier pattern through Argentina. So we just wanted to talk through where they're at in their maturation process and what that would equate to what had it been over here in the States. So Dustin, we'll have you kick it off here this morning. We got a couple of nice charts and pictures that we'll throw up on the screen, and we'll get after it.
Yeah, perfect. No, thanks, Dan. Obviously beans have shown some support the last couple of days, and want to just kind of highlight why that's happening. The first slide here is just the Argentine crop calendar. This is a USDA provided crop calendar. And what we're seeing is, mid-season, it's probably a little bit hard to see some of the colored deviations, I guess, from this image, but mid-season, we're going right into mid-season for Argentine corn and soybean window. So first crop soybean window, we're going right into Jan-Feb, right? We're getting into late March and April as harvest time frame for corn and soybeans for Argentina. So just keep that in mind for reference of where they are in their growing season as the next 14 days of forecast starting to show some of these hotter and drier trends. So this is a service that we use. We found a lot of value from them last year. This is Crop Profit. And what we're looking at is just simply their temperature deviation from average. And we can see, obviously, Argentina's lit up red down here on the bottom. So this is a 14-day forecast for the ECMWF, the Euro model, which is the more trusted model, and they have the average weighted average by area of corn producing areas within Argentina to be 5.2 degrees above normal over that 14-day window on average, with the highs being much higher than the highest average. This is just the average temp. And then the precipitation anomaly is only 30% of normal precipitation within that same window for corn. So what we're seeing is expected fairly large yield drop over that time frame, looking at that map. Just from hot and dry conditions. So time will tell. See, this forecast still has to materialize. See what comes out of it. The market is justifiably reacting with a positive move here. So, And anyway, it's shining, first bullish thing we've really had yet in a while. So coming out of a very sold hedge fund situation, they've been getting short in the last 5-6 weeks of reports on the COT report. And then all of a sudden we're starting to get a fairly favorable forecast for price action. So it'll be interesting to see how we come out of this.
I mean, we've really had favorable weather up until this point, right, for Argentina. So there's probably quite a bit of moisture and built up. Hot and dry will knock that down pretty quick. I would think you would need more than this 2-week stretch. Personally, I think you'd have to drag that out. It's the next 2 weeks. If we keep putting in hot and dry, then it's going to be an issue. I always the most recent year that I always, think about when it comes to an Argentina drought is 2016. It was a really bearish year. Everybody was doubling down on bean shorts that year. A lot of people got caught short. We were at $8 or $9 beans, and everybody was talking that it was going to $6. And that Argentina drought, the market setup was there for a run in, and then the catalyst was the Argentina drought, and I think beans went from $9 to $12 in just a few months. But yeah, it's time will tell on something like that. I think the setup, to Dustin's point, right? The structure is starting to set up for something like that to happen. Everybody getting pretty bearish and short, funds getting short. I think we need some more time to really to pull that crop downward matters personally.
Yeah, Jace, speaking about funds, aren't they the shortest they've been in 2+ years for corn?
Is that
yeah, close to it?
Yeah, I think that's right.
Yeah.
Well, they're the shortest they've ever been on today's date. They're not at a record short yet, but they're not far off of it. And it's been shared a lot on social media. And the problem is you just never know. They don't. It's where it's the shortest they've been, but that doesn't mean they can't just keep getting shorter. There's always new funds and more money and all those kinds of things. But I think the biggest point here, guys, right, is that there's starting to be some things that are becoming a little bit of a tailwind instead of a headwind. So maybe we're at least slowing the bearish slide. And we've been talking about this now for a week. Hopefully we're starting to see enough signals here that maybe we've done enough, taken enough premium out of these markets, hopefully. The short run, at least.
Yeah, I had mentioned in conversations with a couple of you guys as well that even someone who's been very bearish with the kind of decline that we've had and looking at some of the long-term charts, a little bit of discretion would be advised, and that kind of supports the idea of the setup with a really large short kind of defining the U.S. supply situation, and then how nervous would a short get if there was some problem that would poke its head up above it. And I think Jason makes a valid point. It's going to take a little bit more than a short-term forecast, but if we could, see a little bit of issue there, and then maybe incent some Chinese buying all at the same time, we could potentially see an exit. But I think that creates opportunity in our markets domestically. So,
yeah, and Ben, it might not even be, it doesn't have to either be a bear market or a bull market either.
Right.
It could just become a little bit more neutral, maybe put some premium going into spring. It doesn't have to be, if it's not 4, it's got to be 6, and that's kind of the mentality. Like, it doesn't have to be a big bull market, but, it could, like a lot of these markets, if you go back over the last, especially that, 15 through 20 time frame, there's a lot of 50-cent rallies and breaks in there.
Yep.
It can be a big sideways market with a 50-cent range too. So,
yep. And that's one of the things that we don't want to forget is that even big bear markets have rallies within them, and typically in corn bear markets they're kind of chalked at 8 to 10%, and it catches its breath and resumes. But maybe for the time being, there's a few things out there that could materialize.
Along those lines too, this morning, guys, there's stories out that Phillips 66 renewable diesel plant got approved out in California, which will make it the world's largest renewable fuel production facility, 50,000 barrels per day. Lines in the story that we continue to pick up really good domestic demand, right, internally here with these plants coming online.
Yeah. I think that's a really important topic, especially as we've seen our soybean exports be down over 20% this year to China. This kind of transitionary phase for soybeans where we become a bigger domestic consumer, and especially looking forward to potential changes in legislation. No one is slowing down with their investment into renewable diesel, biofuels, etc. So it's encouraging that we have that developing at a time when we really are going to need it forward looking.
Yeah, and there's another thing too. We've touched on this a little bit, and it's more of a medium, probably term thing to watch. But I think there's a really good argument to be made. You saw that Chinese population went down 2 years in a row now. Talking about kind of peak protein demand, out of that country. I mean, there will still be people being pulled into a middle class from a lower class, and some of those kinds of things happening. But the rapid growth, I think we're starting to see that demographic change that people have been forecasting with this one-child policy. So it's kind of an interesting thing when China was double-digit growth every year on protein consumption. If you see that kind of stagnate, which it looks you could argue that it kind of is a little bit here. I know Ryland can talk maybe about this a little bit, but I see that they're putting more policies in place to try to take out some capacity for pork production in China. At the same time that we're doing this kind of renewable diesel shift. So that whole meal oil relationship is just gonna be a really interesting thing that we haven't ever really seen before, and see how that all plays out.
Yeah, absolutely. I mean, there was just a couple articles out the other day just regarding the ag minister really trying to coach up some of these hog farmers. Like, obviously, they've been through this liquidation phase. They went through this massive rebuilding, and now they've been dealing with, an overpopulation of hogs and disease issues to kind of force this like rampant liquidation. And their pork output came out to the highest it's been since 2014 last year at 57, almost 58 million tons. So like they're dealing with an oversupplied pork market for right now. And the ag minister is doing whatever they can to kind of coach up hog farmers and say, here's how you reduce your capacity. Here's how you reduce your population, because we got to get these prices back up. I mean, the average hog producer in China supposedly is losing like $10 a head. So they're trying to get back to that point where they can kind of shrink that size of the population and still have it available. That they don't go through these big boom and bust cycles, that you have something a lot more consistent. It's hard not to expand really aggressively when prices get good, but the government's kind of there to coach them, I would say, at this point. So we would expect that herd size to still kind of shrink here right now. And maybe that coincides with a population shrink or that peak protein demand that you're talking about. So, I mean,
hey, Ryland,
yeah.
not to cut you off, just curious on that. So like when you hear like, crushing facilities here in the US or ethanol plants, right? They decommission some and they're generally cycling through, right? They're building new state of the art facilities, and then they're when they get over capacity, they kind of remove some of the ones that are 30 or 40 years old. Is that kind of what's going on in pork too? I know they've built a lot of these like pork hotels over the years. So is it kind of decommissioning some of the less efficient ones, or
I don't know if it's really I don't know if it's necessarily like a decommissioning, but they just won't run them at a full capacity. They will try to actively reduce or try to shrink, whatever population is in those. Because once the infrastructure is built, I can't really see them like, I mean, maybe they do. I mean, I'm not an expert on their infrastructure as far as like the measures that they would take and when, but it does kind of seem like whenever you get to these points, the government will start throwing restrictions at the market just to throttle that supply, whether it be through something like shutting down these facilities or rerouting herds. But yeah, I mean, like I would imagine that they're just, as of right now, the implications were that they were just going to tell the hog farmers, hey, reduce the amount of head you got. Otherwise, it's going to be too much to deal with.
Well, I would think they can make that decision quicker. When I started, it was, every farmer had 10 hogs, and there was, tens of millions of farmers, right? So they had huge hog herds, but that's been migrating aggressively, especially the last 10 years, into these giant, commercial type operations. So I assume that would be easier to control. It's hard to go tell, a billion people to cut back one hog each,
Right. Right. Well, and consumption will do a lot of the work for them for the most part. It sounded like, just markets flooded, and with pork, especially, and we see this in the US a lot. Some of the trends, at least in meat cuts, like the average consumer will buy bacon in the US like for 6 months, and then after that they stop for like a year. So like you hit a saturation point, and they're almost coming to some of their specific cuts, like sausages get really popular at certain times of the year, like going into the Lunar New Year and such. And, sometimes you hit that pork saturation point. So that naturally kind of throttles some of the demand that you would see. But I mean, maybe it's it seems like there's always some kind of ulterior motive, when you see these big changes. And sometimes that has to do with just even throttling some of the outside purchases that they would normally need to have as well. That's going to greatly reduce a lot of their meal imports or their bean imports, just wheat, corn, you name it, whatever the ration they decide to go with. So that's something to keep in mind, as well as this idea that they've kind of reached peak hog population and are actively trying to reduce it.
That's very good stuff, guys. Just came into the open here. We got March corn up 1 3/4 pennies, 447.5. March soybeans are up 8 1/4, 1232 3/4, and March Chicago wheat's up 4 at $6.50. A couple administrative things here before we wrap. January 29th at 2 p.m., we will be hosting an exclusive webinar for AgYield consulting clients at 2 p.m. Central Time. You can pre-register through the link that's been sent out. John Wenzel from StoneX, the director of energy markets and fuel, is going to be putting on a presentation for us about some trends and different ideas that he's got as we head into spring planting. So that'll be a real good visit, and hope everybody's able to attend. As always, we are streaming live on X, Facebook Live, and YouTube Live every day that the markets are open, 8:15 Central Standard Time. We'll be back with you there tomorrow morning. Same time, same place. We appreciate everybody tuning in this morning, and we hope you have a great day.
Thanks, Dan.
Thanks, Dan.